Traders, this is David with Triple Threat FX. I'm a head trader at the Live Forex Trading Room, which is run Monday through Friday from London session into New York sessions. I specialize in ratio and structure analysis. As you can see by looking at this chart, there's no fancy indicators, just pure price action. To me, this price action represents human emotion, human behavior. Human behavior doesn't change. This particular type of trading has worked for years and years and years, and it's based on Fibonacci ratios and structure, price structure. Let's get into some charts. Here's a dollar Swiss 4-hour chart. Traders in our live trading room were informed to get long dollar Swiss 94.20s. You can see this trade call was issued on Tuesday. You can see we came down into the buy zone, briefly dipped below, and came back above our entry and hit target 1 on Friday after non-farm payroll numbers were released. For 130 pips on our first position. Initial stops were below the low of this structure. First target hit, we move stops up above entry, lock in profit on our second position, and anticipate a move up here to 98.90 level. Traders, 280 pips of total risk on 2 contracts versus 600 pips profit potential. Better than a 1 to 2 risk to reward profile. So, entry, stops were in, price came down here, moved up into target 1, our stops have moved up, lock in profit on position 2. With this, what I do in the live trading room is focus on discipline, money management, and risk management. We follow our rules. We don't deviate from our rules. These particular patterns in trades show a positive profit expectancy. So no matter what, we follow our rules. Without disciplined traders, you will eventually blow your account. If you are out there taking trades without a defined set of rules for entry, targets, you will eventually blow your account. Stop orders. Let me be perfectly clear on the stop orders. If you trade without a stop order in the market, a protective stop order, you are playing Russian roulette. If you go back and look at some of the charts, on Friday after non-farm payroll was released, we had a spike of 100 pips or more on a lot of the pairs, and it immediately reversed and went the other way. We don't trade news. We don't take impulse trades. We trade based on setups. The technicals. The news already in the charts, traders. If you trade based on the news release only, You're doing nothing more than gambling. Here's our next chart, dollar yen 4 hour. Trade was issued on Tuesday. Traders knew well ahead of time entry point, stop, and targets. Orders were placed resting in the market, waiting, anticipating a move into the buy area, which we got. As you can see, consolidated back and forth. Here's the non-farm payroll spike down, immediately reversed, and went up and hit our first profit target. For profit of 100 pips on our first target. Stops were initially below the low of the structure. Stops moved up above entry, lock in profit on our second position, and we'll anticipate a move up here to around the 8400 level. 120 pips of total risk on 2 contracts versus 360 pips profit potential. A 1 to 3 risk to reward profile. This trade here was issued on Wednesday in the live trading room. Traders knew entry, stops, and profit target. You can see the buy zone was 85.50. Price moved down into our buy zone, briefly dipped below by a few pips. So we'll let this trade work. First target around 86.66, stop 84.91. 180 pips total of risk, 2 contracts versus 376 total pips of opportunity. Better than 1 to 2 risk to reward profile. Our stops are in, target orders are in. Let trade work. If it comes down here and stops us out, that's trading. You cannot expect to trade without having losers. Expect a loss, traders. They happen. It's part of trading. We put our orders in, our stops are in, so we don't worry about the trade, we don't get emotional about it, as we have no control over what the market does. New Zealand dollar yen, trade call issued on Wednesday. Again, traders knew well ahead of time. Entry, stop, exit, orders, profit. You can see Friday, spike low. Reverse. Traders were informed to get long. 62.73. Spike low, 62.60. First target hit at 63.25. Stop moved up to entry on second half of position, anticipating a move, 64.50 level. 90 pips total risk, 230 pips profit potential. Better than a 1 to 2 risk to reward profile. Aussie dollar trade issued Tuesday. Get short Aussie dollar. Anticipate a move to 97.40s. Stopped above this high. We closed Friday right at entry. I will go look at another trade that was issued in the live trading room. Here we have Aussie dollar against the Canadian dollar. This trade was actually issued on Tuesday. We came up just below our entry. Retraced in on Thursday. We came up. We're filled on our sell order. Stop above previous structure. First target around 99.50s. Second target around 96.15. Let the trade work. Once first target's hit, move, stop to break even, and let trade work. Trail stops. Traders, these patterns work any market, any time frame. Here's wheat. We had an issue live trading room. Buy wheat, 94.842.70 area. See, wheat came right down into our buy zone. Traders who got long. Protective stops below the structure low. Target 1 around 855.50 level. So 1 point away. Target 1's hit. Stops moved break even or better. Anticipating a move to around the 880 level. Go over another call. We had gotten short the NASDAQ based on a price pattern. This is an aggressive trade. The short is a one contract trade. Stops are above this previous structure high. We got short. Around the 230, 225 level, in anticipation of a move down in the 2260 area. With a reverse and into a buy. This is actually a buy pattern. The aggressive trade was taken to sell. Anticipating move into the buy. Target hit. Reverse long 2. Target 1 was hit. Stops are below this swing low. Anticipating a move. 2365 area.